right, welcome to the New York live trading session. Today being the Tuesday, 22nd of October 2024. I hope everyone is well and ready to tackle this market. Today I'm not going to spend too much time. I'm not going to spend too much time playing around. Um, Today we're gonna jump straight to it. We have a lot to look at. We have the US dollar, Japanese yen, we have pound CAD, we have Aussie dollar, we have US oil, we have UK 100. We also have the German 40, or what was normally used as German 30. As usual, we will begin with the dollar index. Or maybe let us check what economic news are due to come out today, if there are any. 22nd of October. Earlier on, the governor of the Bank of England, Bailey, spoke. It's really hard to decipher this kind of news or to understand where the market is potentially going. Kutela said BTC USD, if allows, time allows, definitely we will look at that as well. So yep, let us go back to the chart, dollar index from a monthly time frame. Right, as you can see, strong bullish push to the upside towards a area of supply I've been looking at since I think July, which is 105. I've been looking at the supply level for the dollar to lose value at, and we're headed towards the US elections, which I really believe it's gonna help the US dollar break out of this big consolidation point. So yeah, with that said, bullish on a monthly. Let us check a weekly time frame. Bullish again. Let us check the daily time frame. Bullish as well. So with the dollar index, you can only try to find buying opportunities from here. It seems like today people will keep going in and out. I don't know, probably there's a problem with the connection, but I'll keep on letting you guys in. So that is to say, US dollar strength or weakness, I think it's strongly pushing to the upside, as we can see. There's not much decision that we can make now. Looking at where the dollar index is from this high to that low, or from this low to where it is, it's kind of somewhere in the middle. There's not really much we can do, but we can start to react once it gets to 105 500 or 101 100. So these are the levels that we will be looking at on the dollar index. And next, let us check US dollar JPY, US dollar Japanese yen. So, sorry about that. Since since the dollar index is showing some strong bullishness, since the dollar index is showing some strong bullishness, we should anticipate to see a strong dollar Japanese yen as well. As you can see, very, very aggressive push to the upside. Look at that candle. Let's check on a weekly time frame. Remove drawings. There we go. Current candlestick, very strong push to the upside. Daily time frame, bullish as well, even though it's almost like a doji, but I'm sure you can get the overall picture here that we have a very strong bullish movement. So from this daily time frame, I don't know, like I said, I'm a long-term trader. I would wait for dollar Japanese yen to come back to 144, then I can buy from there. but there is an opportunity we can try to find, so to speak, in the short term. Like if we look at this, this was fair value. I was anticipating the market to come back lower, but let us find areas or candlesticks that signifies strength. So it would be these ones, these two, 1, 2. I think there's a comment. Only says, Stella, thanks for to join the meeting. No worries, Tembiso. Welcome, Stella. So we've got this strong push, this one, and that one. 144 is quite far for price to come back to it, but let's look at what we can find within this big bullish candlestick. So we're going to step down to a lower time frame. Remember, to find an area of supply or demand, we're looking for an area that has a brief consolidation and a big push. So since we are almost at the end of this month, I would say let's look for something very close to current market price. So hence I would focus on this demand level, right? One would say, since we're saying it's bullish, why can't we buy from right where it is? Remember, if you buy at current market price, what you're doing is increasing risk and minimizing reward. But if you are going to wait for it to come back to the right place, because as a buyer in general life, you want to buy at a lower price. So hence you would wait for the price to come to this level and push up. So this is wrong. Do not buy at current market price, because what you're doing is increasing risk. What you want is a low risk setup with a high reward. And we've talked about this time and time again, as far as how does that help you on the days when you're going through a losing streak. A low risk, high reward strategy will save you. Okay, there we go. Dollar Japanese yen. I think this is the setup that we we can try to I'm sorry about that, to focus on. Lots of things that we can look at here. If you more into trying not to take too much time with this. If you're more into smart money concepts, everything still works. We have a breakoff structure there. We have imbalance right here. Oops. Let's take that back. So we've got that imbalance. There we go. Also right here, we have, there should be some equal lows here, which is liquidity. So we need to take out that liquidity and then push back up. So everything still works. What else do we need to look at? Let's look at Aussie dollar. So since on the dollar index, we're bullish. That means we're bullish on the dollar Japanese yen, as we've seen a potential area to buy from. So you don't need to aim for that high. And even if you get a 1:3, but I always aim for a 1:5, right? Do not aim for the fences. Okay. So I was saying the dollar index is bullish. The US dollar JPY is bullish as well. So we should anticipate an opposite movement from the Aussie dollar. Let us look at the Aussie dollar. So I hope you have been noticing that ever since we started these live trading sessions, I have been analyzing the market the same way. It's very important for you to apply as well. so that you can know when you're doing wrong. Once you have some variables constant, you will know whether you are doing well or bad. So Aussie dollar, bearish on a monthly, bearish on a weekly. Why are we looking for at how the market is doing from the daily, weekly, and monthly time frame? We're trying to find the direction of the market because the direction of the market is going to inform us whether we need to be buyers or sellers. So, right, we are also bearish on the current week. Let us see on a daily time frame. We are seeing some bullish signs. However, if you'd ask me, I would stick to my monthly time frame and weekly time frame bias. Always follow the higher time frames. So long term, I would look for a selling opportunity up there. But if we have to look for something closer to current market price, we can look at this. But remember, even if we go to a 1 hour time frame and we find that there is a nice buying opportunity, we won't entertain that. Why? It is against the main flow of the market. The main flow of the market is sellers are in control. So we need to be looking for more selling opportunities. So let us step down to a lower time frame and see what we can find from here. Look at that. Remember, what are we looking for? Remember, what are we looking for? We are looking for an area with brief consolidation and a very aggressive push to the downside now. Why to the downside specifically? It is because the weekly and the monthly time frame are bearish. Hence, we shouldn't be looking at anything else. Anything that gives us signs of a buying opportunity, we will not entertain. So look at that. Market was pushing up and in a more consolidation manner, and then boom, look at that big drop. And we had fair value here, another big drop, fair value, reversal to the upside, fair value. But let us look at where did the aggressive drop begin from. So we're going to use this last candlestick. There we go. I think we can remove our arrow. So now it looks like we're getting somewhere. Looks like we're getting somewhere. We just identified our fresh area of supply where the market has a high probability of turning from. So what are we expecting here? We're expecting the market to come back to that area and drop further to the downside. Let us plan for this trade. Obviously, our entry is going to be here, right at the beginning of our supply level. Stop loss is above that. Target profit, for me, it's always a 1:5. There we go. This is a very nice setup. So done with Aussie dollar. Let us look at GBP CAD. You see, I think at this point, you have realized that our methodology relies on identifying these turning points, future market turning points. You identify them in advance or ahead of time so that you have enough time to calculate your risk, enough time to assess whether that setup ticks all the boxes, right? So we are following a more relaxed approach. If you'd see how I trade, I just place my buy and sell limits and continue with life. All right. So monthly time frame on the British pound against the Canadian dollar, we are bearish. I think the weekly is bullish. Oh, it's bearish as well. This is good. A daily should be bearish as well. So Now, that means we have to step down to lower time frames. And what are we looking for? We're looking for anything that says we must sell. Anything that gives us a buying opportunities, we do not focus on that. Why? Because that is against the flow or that is against the trend. I'm sorry about that noise. Okay, let's step down to probably 4 hour first. I go through a lot of time frames for one reason. Okay, I just saw a supply here. I go through almost all the time frames for one reason, not through all of them. 15 minutes, from 15-minute time frame upwards. I go through all of those just to make sure that there's nothing that I'm missing. I just want to make sure that there's nothing that I'm missing. Remember, I'm risking my hard-earned money on every trade that I take. So if I happen to fail, it shouldn't be because I didn't prepare enough. It should just be because maybe I was wrong or I was expecting for there to be more buyers than sellers, and it turned out to be the opposite. So yeah, there we go. Pound CAD, simple. I always keep things simple. So what could be challenging about trading the same strategy I trade, which is supply and demand, is if you are not a patient person. If you're not a patient person, you're going to struggle a bit. So you can aim for these lows, 1:5, or just aim directly for that. I prefer the 1:5. It's just stress-free. Just be patient. Wait for the market to come here. Why are we not trading somewhere here in between? This is where people lose their money. Why? Because here we were almost trading at the same price. So this is what we call fair value, which is what we try to avoid at all costs. Or you can think like this. Remember, premium versus discount. Every time you have to buy at a discounted price, which is lower than equilibrium. So which means you need to look for areas to buy in this region. But because we're looking for areas to sell from that high to that low, that means we need to look above this equilibrium line, which is where premium prices are. Do not get too technical once you start trading, because that is how you or people rather lose it. Now let's look at the equities market, to be exact, US equities markets, which is the UK 100 or the FTSE 100. For the FTSE 100. I hope you can still hear me. Let's check on a monthly time frame. So we are bullish on a monthly time frame on the UK 100. Let's see what's happening on a weekly. There you go, the weekly bearish. So we have some contradiction here. Kutala says, I really appreciate these sessions. Lost of words to describe how helpful you have been in my trading journey. Thank you, Mr. Lamini. You're welcome, Kutala. You're very, very welcome. All right. Let's go to a daily. Daily is bearish as well. So on a monthly time frame, we saw I really like it when once we find contradictions within the time frames, because that tests how much you know about what we've been talking about, following the trend. So out of the 3 time frames that we prioritize for direction, which is the daily, weekly, and monthly, 2 of them agree and 1 is different. The different one happens to be the highest time frame, the monthly time frame. The monthly time frame is saying we're bullish, but the daily and the weekly are saying we're bearish. So which one should you follow? The answer is obvious. The highest time frame, which is the monthly time frame. Meaning, now that we've established direction, we need to be looking for buying opportunities only once we get to the lower time frame. So immediately you get to the daily time frame, your mindset now needs to shift. Now you're looking for an entry opportunity. You're not looking for direction. direction will inform what type of entry do you need to look for, whether it's a buying entry or a selling entry. In this case, it is a buying entry. And if we look at these candlesticks right here, sorry about that. 1, 2, 3, 4, 5. Let's look at this last 5 candlesticks from the current one. You can tell that this is the biggest one, or this one has the biggest momentum to the upside. Okay. So this is a big push to the upside. So now that we're going to a lower time frame, maybe let's start on a 4-hour. What are we looking for? A buying opportunity. Trust me, you do not have to struggle. It will just pop up. Look at that. A drop, brief consolidation, and aggressive push. Look at this imbalance. Huge imbalance. There we go. Then we have our demand area. I'm showing you guys this one because we've already tapped into this area. I'm in this trade as we speak. Sorry, I couldn't show you earlier. In terms of planning for it, I'm aiming for simple this highs here. It will give you a nice 1:6, but I can also stick to the 1:5 and I'll still be okay. Remember, you do not need to catch the whole move. You just need to build the wins. Let us go to a lower time frame, maybe like 30 minutes, to see if is it still possible to rejoin this trade. I think it still is. You can still wait for it to come back here. Always. I know it's looking strongly bullish on a 4-hour time frame. You might be tempted to buy now, but it's wrong to buy now. Always wait for a slightly lower price, okay? Always wait for a slightly lower price. So there is our region. So if it comes back here, you can still trade this one. So this is where you can have multiple, this is how rather you can have multiple entries on the same pair. So the first one was this big one here. I need to differentiate them. So the first was this big one here. Let's target the same area. So this is how you can take 2 trades on the same pair. So this was the first reaction, which was this trade. It can give you a 1:5, and we're waiting for a retracement or a cheaper price to buy again, which can also give us a 1:5. So originally, this is a 1:5 setup, but if you can take advantage of it the right way, it can give you a 1:10. I hope that is clear. Stair says, thanks for this session, Mr. Lamin. I wish to help you to help me analyze gold. Okay, we're going to look at gold. So we need to add gold and BTC from Kutala. All right. Hlanganisa Lamin says, thanks, Ngosi. I missed some of the sessions. Where can I recap? On YouTube. I always upload them. I always upload them to YouTube. I'll also share the links on the groups. Okay. Let's look at US oil. Remember, I hope you've noticed once again, I've been analyzing different markets the same way. I've analyzed the currency markets, I've analyzed the commodities market, I've analyzed the equities markets, and I keep getting the same trade idea. So this is the importance of following one strategy that can work across all markets. Oh, Pindi says, what is the name of your YouTube? I will share on the Telegram group. I'll share the link again. I'll share the link again. Okay, so let's look at US oil. I just want to make sure that I have enough time for us to go over what you guys requested. Let's look at US oil. A very interesting commodity these days, with especially with the war between Israel, Lebanon, Iran, and the rest of the Middle East countries, because they form most of the OPEC countries, the countries that are in the committee that regulates oil prices, and also they're the main suppliers of oil to the rest of the world. So when there is war there, supply is threatened, meaning the whole world might go in short of oil supply. And oil and petroleum products are always in high demand. So we might anticipate an increase of oil prices in the next coming days, with experts saying we might see a $20 per barrel rally. So from 70, which is where we are, to $90 per barrel. Let us see what is happening today based on the technicals. Trade what you see, not what you think. All right. On a monthly time frame, we're bullish. Bullish on a weekly as well. Very interesting. Let's look at a daily time frame. It is bullish as well. So why? I'll keep on asking this question because it will help you understand that why are we going through a daily? Why are we going through a monthly? We're going through those time frames because um, we're going through those time frames because we need to um, find direction. Direction will inform us whether we need to be a buyer or a seller. In this case, we need to be a buyer, right? Potentially look for areas below current market price. So we need to look for demand areas somewhere there. Let's go to a 4-hour time frame. Very nice push. Look at how big this candlestick is. That is a sign that banks were involved here, and this is what we like to see. We also like to see this, which is fair value, the area that we avoid. So once it's near our areas of interest, happy days for us. Okay. Let's go to 1-hour time frame. I am running out of time. I've got less than 9 minutes now, but we will get to the others. Very nice looking setup. So US oil. So expect US oil to come down to $68 per barrel. From there, we can push higher. So we always do this ahead of time. Always do this ahead of time. So in terms of planning for the trade, you can enter down here and aim for, even if you aim for this high, you've got a nice risk reward ratio of 1:4. But personally, my target profits are here. 1:7 is enough. Even if it goes all the way to 100, it doesn't matter if you've missed the whole move, as long as you were able to catch part of the move. The guys that are going to catch the whole moves are the big investors, you know. They have the capital for it. So before we BTC USD, we're going to look at BTC USD and gold. It's highly likely that we have some analysis here. So let's start on a monthly time frame as usual. Do not change the way you analyze the markets. If you start on a weekly, do not then someday wake up and start on a 1-hour time frame. Okay. Keep it constant. Keep it. This is a science. There's maths. There is human psychology. Okay, so we are bullish on a monthly, but bearish on a weekly, and also bearish on a daily. Okay, this is where the importance of direction once again is. It will tell you whether you need to be a buyer or a seller, right? What stands out to me are these areas of brief consolidation and aggressive push up, right? So we had a drop, brief consolidation, big push. Consolidation, big push. So we have these two areas. So the question is, which one should we use? I always ask this question. Let's see if we can answer it the fastest today. So we've got zone A. Let's see if it can. We've got zone A. We've got zone A and zone B. So these are demand zones. Who can tell me where is it ideal to buy Bitcoin?